What is up, guys? Happy Tuesday. Dirk here. I'm going to look at the weekly chart in this video of Bitcoin and Ethereum and what I think for the markets ahead now that we have had the weekly close. A day late, sure, but the weekly close is upon us. Plus, we are almost at the end of the month, so that's going to be important too because we have May coming up. And is this year in 2023, is May going to be a case of sell in May and go away? Are we going to get a major correction or market sell-off on the lunar eclipse on the 5th of May, like we have had in both lunar eclipses in 2022? All of that I'm going to go in this video, so let's dive into it. Now, real quick, I have a big announcement because my intelligent trading course is finally complete and it is now live. So if you're an existing VIP member, you already have access to this in the members area, and you can just skip this part of the introduction. If you are not yet a VIP member, then this trading course is literally A to Z from beginning to end. Everything that I know about trading the financial markets, not just crypto, but also Forex. And the concepts that I teach in this course, it teaches you everything about reading charts, about how to trade with leverage, day trading, swing trading, spot trading, teaches you all the concepts. I teach you my own system that I use, how to trade. It works beautifully in the Forex markets too, which is fantastic if you are in the US, because trading leverage in the US is near impossible these days because there's just no legitimate platforms. All of them are basically banning US users. So if you want to learn how to trade and you want to day trade and with leverage, then if in the US, Forex is an option. I teach you how to do that in the course. And what is really cool is I teach you how to get access to capital to trade with. So if you have very little capital available, no risk capital, then you can get access to 6 or even 7 figures worth of capital. Yes, that's hundreds of thousands, even millions of dollars worth of trading capital if you can prove that you are a profitable trader. You use what is called a prop firm. They have an evaluation which you pay for. That's usually a small amount, usually about 1% of the capital that you're requesting. So if you want $100,000 in trading capital, the evaluation usually costs less than $1,000. And if you pass the evaluation, you get the real money account and you can keep up to 90% of the profits, depending on the individual prop firm, 75 to 90%. And this is a great way to jumpstart your trading career because you can use other people's money. You can get a huge bankroll. And if you're profitable, you can really work your way up in profits that way. And even if you have the capital, this is a way for you to use other people's capital so you don't put all your own money at risk and you have far less risk to the downside. So all of this I teach inside the course. Right now, for the next week or so, during the launch, there's 50% off. So if you click the link, first link in the description, all the details, everything is explained there. It also comes with a 60-day money-back guarantee. So go through everything, you get instant access, nothing's held back. You can test it out, you can go through the course, try out the concepts, and if you're not happy, you can get a full refund. That is how confident I am that this will help you with your trading results. So with that out of the way, if you're interested, click the link down below. You're literally saving 50% after that the price doubles. So check it out. Let's dive into today's content. Okay, so let's start out by looking at Bitcoin US dollar. It's at 27,370. This is the weekly chart on Bitstamp. And the 2 key levels that I am watching, there's actually 3 of them. It's 3 key moving averages that if you follow my channel, you'll see me talk about these again and again. It is the 50 and the 200 simple moving average on the weekly chart. Okay, 200 week moving average here in red, the 50 in blue, and then the 3-day 50 moving average also. We'll look at that in a second. But these are basically the higher time frame, the bigger picture, bear market or bull market, bearish trend or bullish trend indicators. So very simple, as long as the price is above both of these indicators, the trend is just purely in the most bullish territory that there is. And once we start dropping below them, well, then we have to reconsider that maybe the trend has changed and it has gone bearish again. So you can see the 200 here on weekly, it has basically been support. The price has been above here for the last many years, with the exception of a very brief time during the March 2020 sell-off. For the rest, it was all above here. During the 2020 bear market, it dropped below and spent a huge amount of time here in comparison to what has happened the last few years. And after that bottomed, we got back above here. This is just technically bullish on the high time frame. So if we even just pull back here and retest it, as long as we stay above here, there's no danger to the bullish trend. And it simply can chop around here and consolidate and continue higher. Okay, that is the most bullish scenario. Now, more bearish scenario comes into play if we drop and get a weekly close back below the 200 moving average, because then we have to start considering that this was maybe a deviation above it and potentially we go lower. However, we still are above the 50-week moving average, and that is still a bullish indicator. So even if it drops below the 200, as long as it stays above the 50-week moving average, we're still okay. You know, we can get corrections and pullbacks in bullish trends. That is perfectly okay. But we do not want to see, or I don't want to see it get below this 50-week moving average. So that is the line in the sand at this point in time. 22,000. If we get a weekly close below there, I would flip bearish again and potentially expect a retest of the lows or maybe even new lows. Until that happens though, like I said, we're well in the clear. We're still above the 200-week moving average. Let's just see what happens. That's about 25,800. We can pull back there. If it bounces from there, absolutely fantastic. And maybe we just resume the bullish trend and we continue back up to 48,000 in the next few months. That is a possibility. So this is, in my opinion, the best way to view these markets is basically with an if-then kind of mindset, right? So it's very simple. If the price is above the 200, it's bullish. If it breaks below there, we have to consider a more bearish scenario. If eventually it breaks below the 50, well then, you know, it's time to potentially flip bearish. Very, very simple. And that also allows you to manage your positions accordingly, right? If we flip it, if we get below it, etc., then it's maybe time to reduce, maybe time to add on, depending on what just happened. So that's a very easy way to kind of approach these markets and to approach longer term buy and hold investing decisions, in my opinion. So like I said, we have about a week left before the end of the month, and that is going to be telling. If we drop a lot and this month ends up closing badly at the end of the month, you know, I'll do an update on the 1st of May, then we can see what that is potentially warning us for the month of May, which potentially could mean a sell-off, right? I talked about this in previous videos. We have a lunar eclipse on the 5th. The last couple of lunar eclipses were bearish, okay? And the FTX crash happened and the Terra Luna crash happened last year during lunar eclipses. So we have one coming up. If this is setting us up potentially to be bearish and the monthly closes in a bad way, we'll know at the end of the month, then maybe signs to be cautious. And again, we could sell off. If we drop to the 50, the bullish trend is still okay as long as we don't get a weekly close below that. And actually the 3-day 50 moving average is also one that I'm watching. It's basically at the same level as the 50 right now. So that's why I say 22,000 is line in the sand. For me, as long as we're above there, bullish trend is still on track on the higher time frame. And let's just see what happens. We're in a tricky spot here where, you know, do we drop more? Do we chop around? Do we bounce? And especially with May coming up in this lunar eclipse, let's see what the next couple weeks bring us. But that is basically the criteria that I'm looking at. Okay, so let's take a look at Ethereum on the weekly chart. It's at 1824. And just looking at the chart, technically it actually does not look so good, because if you look at this chart immediately, to me anyway, what stands out is this exact thing over here, right? You can see how similar that looks. What we had here, we had the high, it deviated above the high, dropped back in, and there it continued lower. We have this high, it deviated above the high, we're back in the range, similar, weekly green, weekly red next to each other like that. And it's not looking too great at this point in time, I must say, from a technical perspective. And usually the rule, if this is a range, right, we have a low, we have a high, whichever side it sweeps first, it would target the opposite side. So if this is a range, again, I'm not saying 100% that it is, then we swept this side, we got above this high, and technically the theory behind this type of setup is that we would target the low of the range, which obviously would mean that the whole markets would crash, because if we're going back down to the lows or beyond, it's obviously not going to be great. Now, the only thing I will say about this is that the conditions between this setup and this setup is a little bit different, because here we were in a bearish market. We were already below, you can see over here, below the 50-week moving average. Markets were trending down, things were changing, okay? Whereas here, we've had multiple months of upside. We are now above key moving averages. So those conditions are not quite the same. And that could mean that it might not play out in the same way. But, you know, just from a theoretical perspective, if you see this setup without knowing what the chart was, there's probably a high probability that this could continue lower. Now, what we have to hope for here is that we don't drop much below this mid-range at the worst case. Okay, so we have the 50-week moving average here in blue with the middle of this channel. Hopefully we can say that would provide support. It's probably also a little bit of confluence here. If you were to take this from low to high, you can see there's also the confluence of the fib golden pocket. So basically, worst case, I wouldn't want to see it get below here. It's about 1350 at the very worst case. If it goes below there, I would say there's probably a good chance that we go back to the lows or maybe even new lows. So it does look like there is some potential for more downside in the next couple of weeks, and that could be lining up with a bearish May, sell in May, go away, lunar eclipse, etc., etc. And if we do see a correction, right now we're at 1800, so we could drop a couple $100 on ETH in the next couple of weeks. But as long as we stay above this level and potentially bounce from there, then there's still hope for later in the year for continuation to the upside. And maybe one thing we could consider also is that a pullback now in the next couple of weeks, and a decently sized one, 20-30% in Bitcoin and Ethereum, maybe that's a good thing. It would flush out a lot of the leverage, it would reset a lot of the indicators, bearish divergences would get taken out, etc., etc., and it would give us a chance to start from a more neutral kind of standpoint and hopefully to continue higher there. So at this point in time, unless we get some sort of crazy upside move, which I guess is always possible, the charts do seem to be leaning towards more downside, in my opinion, over the next 2 to 4 weeks. And we're going to have to wait and see how that plays out. I think what's important, like I said at the beginning of this video also, is how this monthly candle closes. It will be more telling towards, it's kind of going to reveal more about what could lie ahead for May based on how that candle is going to end up looking. So on the 1st of May, I will do an update based on that candle close, so make sure to subscribe down below if you haven't done so yet. So what does this mean? Personally, what would I be looking at? Well, it might be time to be a little bit cautious, to skim some profits off the top. If you are in profits, those are all things you can consider, obviously based on your own financial strategy and situation. How much have you invested? Have you over-invested? Do you need the money? And so on and so forth, right? So those are all decisions you need to factor in. Can't give you financial advice, make your own decision, but think about those things. What would you do if the market were to drop back and this was a top like this and we are going all the way back down, right? And that means a 50% drop. Would you be able to handle it? If yes, if no, consider those options and then make a decision based on that. If you're fine and it's risk capital and you still have risk capital to invest and you're just going to hold, that's cool. Maybe you can even dollar cost average. That would be ideal if it does go lower. And if it doesn't, you still have your position. But if you've been irresponsible and you're grossly overinvested and a 50% drop would put you in serious financial difficulties, well then obviously it's time to really consider doing something about that. Okay, make your own decisions. Again, just warning you for the possibility if that were to happen and we were to drop 50%. I'm not saying we will, but worst case, what happens if? And if you can survive that worst case scenario, if it never happens, great. If it happens, great. You're in the best situation for all possible scenarios. But personally, what I would be expecting, probably what is realistic, is maybe in May, maybe do something like this, and then hopefully continue higher later in the year. That would be fantastic. So this would be a zone of interest for me, the confluence of the middle of the channel, the Fibonacci golden pocket of this move, and the 50-week moving average. So it's a lot of confluence there. If it gets there, it's probably a good swing entry for a long position with a reasonably tight stop and a decent risk reward to the upside for doing so. So personally, I would be looking at longs if we do get that pullback, and then we're just gonna have to wait and see what the market does. And obviously, the rest of the altcoins, I mostly just focus on Bitcoin and Ethereum because the rest of the altcoins are gonna follow what this market does in broader terms. So if Bitcoin and Ethereum are going down, most altcoins are probably going to follow and maybe even outperform to the downside, right? So as long as Bitcoin and Ethereum are trending up and going to new highs, then there's a chance for altcoins to really get that bullish scenario. As long as that isn't the case, well then just simply look at Bitcoin and Ethereum for the direction of most altcoins also. So that was relatively short but sweet. I think it's the key things of what we need to know. We need to see how this week plays out, how the monthly candle closes, and then I will update you on the first of the month. I will also make a couple more videos throughout this week because now I finally have some time after finishing up this entire technical analysis and trading course that I've just launched. Again, there's a 50% discount for the launch week for the next couple days. So click the link down below, check it out. Everything is explained there. You get a huge discount. There's a 60-day money back guarantee. You have nothing to lose by joining it. You know, even if it is not for you at the end of the day, I give you that chance. You can join, you can go through it, practice, learn something, and if you really, after doing that, decide, hey, you know, this is not for me, I'd like a refund, simply email me and you get your money back in full. But after the timer on the page through the link below hits 0, the price is going to double. So you're really in your best interest to save that money and just to buy the course now, go through it, and then decide if you want to keep it or not. I think it'll really change the way you look at markets, how you trade, the things that you thought were possible or impossible. There's a lot of stuff in there. It's literally 10 years of my experience in these markets all put together to help you get better results from trading these markets. So click the link down below. If you haven't subscribed to the channel, subscribe, smash the like button. I will see you in the next video.